Roger Knecht, president of Universal Accounting Center, and it's here that we discuss things related to your business and how you can better service your clients, offering quality accounting services and getting paid what you're worth. It's on the show that we invite guests each and every week to actually share with us their expertise as to what it is we can be doing as accounting firms to better service our clients and obviously run the premier accounting firm in our area. I'm excited today to have Duane Deason. He's a CPA who has actually spent the last 25 years helping companies manage costs and operate more efficiently. Early in his career, he launched a company that provided financial support for organizations undergoing transitions. After selling his firm, Duane stepped into the role of CFO for a public company struggling to avoid bankruptcy. His efforts stabilized the company and allowed for a graceful exit through acquisition. This experience was the catalyst for Duane to actually dedicate his career to cost management. Duane now is the founder and president of the Efficacy Group. He actually furthers this topic through cost management by speaking, training, and advising. Duane is a certified public accountant that holds an MBA from Georgetown University. He is also the author of Operational Svelte, Management Costs to Increase Profit and Enhance Performance. Duane, welcome to the show.
Roger, thank you for that great introduction.
You're very welcome. It's your life. You're living it. So this is good.
Yeah, right.
So here's what I'd like to do. I'd like to, first of all, give my listeners a little bit of context to your background. Why become an accountant? Why become a CPA? How did that happen?
Well, that's a little bit of a clumsy story of decisions you make in college, where back in my day, you had to stand in line to enroll for classes. And I was standing in line with one of my fraternity brothers at 7 a.m. in the morning. And of course, as all good fraternity brothers do at 7 a.m. in the morning, we had a couple of drinks while we were standing in line waiting for the classes to enroll.
At
And
7
by
in the
the time
morning?
we were right. And by the time we got, 2 hours, we got to finally register for our classes. I had copied over he had convinced me that accounting was better than this new computer information systems major. And I had copied his calendar and his schedule and changed my career based on being in line with a fraternity brother.
I was expecting in that story to hear that there was a cute girl as well, but that didn't happen.
I'm sure they were around, but the part I remember, because it changed my career, and of course I didn't realize that was happening at the time. That's the part I remember most. And quite frankly, I found it a very rewarding career where I have very much enjoyed not so much the part where I was just doing auditing and the classic accounting type of work, but really the cost management that I entered into later, I found is something very rewarding, and I very much have enjoyed my career.
I love this. Well, I'm happy that you did that because it's a great segue. Let's talk about cost management. I think that's a big, broad topic in some people's minds. So let's try and narrow it down. What do you mean by cost management? What's it that you're focusing on? What's so enthralling about it?
So what I do is I go into companies that are, and unfortunately, they usually call me when there's a performance issue or there's a financial challenge.
Yeah.
Occasionally, I get a call from a progressive company that just wants to do better, but I usually get called in order to try to help them become more efficient and more profitable. And I very much enjoy that role, because when I leave, I feel like not only are they more profitable, but it's an accelerator to their growth and performance, because being a lean company makes you more successful, more nimble. It's not just more profitable. So it's one of those I can walk away. I feel really good about what I've done there.
I'm going to really appreciate this conversation because recently we've been having discussions about the commoditization of accounting and just basically producing those financial reports and so forth. And what you're describing here is businesses who need some assistance to actually address their cash flow situation. You brought up efficiency, obviously cost control. That's very important. So when I speak of this, one of the things that I do is I try to emphasize the difference between improving top line revenue, but also at the same time increasing profitability of the business, because at the business level, there's a lot of vanity as to what we can do about increasing revenue. But when you put into place cost saving measures and address the expense side of business, that's where the sanity comes in, because of the fact that you're now focusing on that net income line. What are we doing from a profitability standpoint? So I want to talk about this from an accountant's point of view. You're clearly going out there and servicing your clients in this space. What can an accounting firm actually do to effectively offer these types of services?
Well, accounting firms are uniquely positioned, and it's really because they have a core skill set and access to information and data that is really the catalyst to everything else. So I highly recommend that accounting firms approach this and learn how to this skill. It's not something that you can just stick someone who's been an auditor or in tax and instantly they know. But
Yeah.
it's very. I find the group that is most adaptable and learn it and will learn the quickest are people with a financial, and particularly accounting backgrounds. And it's great. It's a great field for and extra revenue for times that are slower, like summer, or if you're into the auditing world and you need off cycle type of work. It's great. It's great work in that way. So I think accounting firms have a great opportunity to do well there.
Yeah, the way I typically refer to it is this is them moving beyond the bookkeeping and accounting type services more into that advisory role.
Yeah.
And now you're in that CFO space working with clients in more the policy side of the business, the cash flow
Mhm.
side of the
Mhm.
business, and so forth. So the thing that I'd be curious to know is you contend that there's actually more effective or efficient ways to do cost management because a lot of times there might be time spent on ineffective ways. What would you say is better use or strategies that could be done by an accounting firm with their clients?
So what most companies do when they miss a budget or their financial targets or starting to have cash flow issues, one of the first things they do is they turn to cutting headcount, which I think can be very damaging to an organization. And they do that very logically because it becomes the easiest and quickest solution. And what I think accounting firms have a little bit because of that auditing and data and mining type of mentality is they can look beyond that. What I recommend is a company cut headcount as a last resort and first focus on understanding where are they spending their money. How can it be done more efficiently? And I drill down in all those analysis, and it takes a little bit more time. But as a result, at the end, we have a leaner organization, and then we layer on the headcount aspect of it. Now that we know what is optimal in the organization, what is the best headcount to accommodate what we need to do, and sometimes there's still headcount reductions, but usually far less. And when you cut headcount first, you kind of get yourself into a little bit of a death spiral where you cut too much headcount, the company starts to suffer again, so you start having poor performance again. And what you do is you cut headcount again, and it just kind of becomes circular in that way. And so I really recommend a more slow, contemplative approach that produces better results for the organization if you have the time to do that. And that's what accounting firms can absolutely offer.
This is a great part of the conversation because, yes, it is sometimes a knee-jerk reaction. Payroll
Mhm.
oftentimes is that most costly thing in the expenses. You can easily just let people go, and by all means, there goes a good portion of those expenses. But you're speaking of a number of things that I think are more important. It's the business model. Is that effective, and does it need to change before getting in and letting go of individuals? Because there's a good deal of training that's already happened with these people. They may be the wrong people in the seats, but
Mhm.
they also could be the right people on the bus. They're just
That's
in
right.
the wrong seat. So what we want to do is try and figure out before we start losing individuals who perhaps may be loyal and so forth. We want to basically assess whether or not they could be better utilized elsewhere, and that's an evaluation of the business. Am I explaining that well?
I think you're doing an excellent job in that. And I think it's trainable on both ends. Not only can you train if you're an accounting firm, can you train your people pretty efficiently because that they are kind of gifted in this analysis, but also you can train your clients and try to get them. Not only do you feed them the fish, you teach them to fish. And a big part of my book, Operationally Svelte, is about that, which is trying to help companies set up a structure that lasts. Because what I notice is that after I've left a company, 2 or 3 years later, I can go back and do the whole project all over again. But a lot of the lessons and analysis and approach I took didn't stick because they didn't set up a infrastructure and a process that made it last. And so I think accounting firms can do a lot of effort to make sure that their clients are continuing to operate efficiently and helping themselves.
I'm loving this. This is great because you just said two words that I want to dive a little bit further into. You said infrastructure and process. And with
Right.
infrastructure, consider organization, how the company is actually organized. With process, it's the SOPs and so forth. Where do you typically begin first? Are you looking more at the organizational structure, or are you looking more at the processes that the business has in place?
So I do like to look at the organizational structure. Those things are so critical, but I always start with the science. I always look at, where are you spending money? Where is it going out the door? And
Uh-huh.
then I drill down on that. Is there contracts behind that? Is it being properly utilized? Are we getting the best discounts we can? And so I start looking from that aspect. So when I talk to management and start going after some of the bigger picture issues, which can be, there's poor management practices, a poor culture, and other types of things that are very important to cost management. I'm educated already about the company, so they don't, because if you go in and you start like that and you really don't understand the company yet, I feel like they discount your opinion, even though it might be very accurate. And that's, again, where accounting firms can shine, is that they already know their clients, because there is no better way to start knowing your client by understanding their financial situation, their financial statements.
Excellent. Well said. Yeah, one of the things I'd like to say to complement that is I do feel that the organizational structure of the business could need a lot of attention, but there's an emotional side to that because it's involving people. What I
Yep.
typically find is there is less emotion attached to the processes in place.
Mhm.
They're more willing to actually change or fix how things are done than they are to actually deal with individuals. And so what we typically have found is you go in and you start looking at the processes. You begin with, how do you make money around here? Help
Mhm.
me understand how you're marketing, selling, what you're selling, what are the margins on that? And all of a sudden, you're starting to understand that revenue side of the business. Then we
Yep.
talk about receivables is generally where we will focus. And with receivables, we're just trying to figure out, okay, when somebody buys the product or service, is it all paid up front? Are there terms that are associated with this transaction? What does it look like on the receivable side? And how well are we collecting on the receivables? Then the next thing we start to focus on are payables. Where do we spend our money? I understand now where it's coming from. I understand now how we get the money, but now I want to understand, where's it all going? And that's where the expenses come in. And all of a sudden we start to have a discussion about, well, why is this important? Why is this needed? Why is this necessary? And then when you start to have that conversation, much like a controller would in an organization, you start to look at the vendor relationships that business has with third parties. You're looking at the net term relationships. This is due upon receipt. These are net 30 terms. What can we do to actually improve the cash flow as it relates to how businesses are flowing from the monies that they're getting from the sales they're making to the bills that they're paying to be operational? What would you add to everything that I just shared?
Beautiful, by the way. I don't. I'm not sure I'm going to improve on that much at all. But I'll say that what you're talking about is you're building credibility by
Mhm.
doing the math, doing your homework, and that's allowing you to build momentum, and then you can move on to some of the structural issues, because it does. It's many companies, I would say, half the opportunity is because. And I'll give you some examples. A CEO who's a visionary and loves visionaries and hires nothing but visionaries. And so you don't have a right balance of skill set. You have CEOs that like to spoil their employees once a year with a big extravagant event, but don't understand that when you do that, you're sending a message to employee that the company is really wealthy, and the company and money doesn't matter, and we can be extravagant. And so you're not instilling the values where they have to watch money. And you have to keep in mind that employees, half of them are living paycheck to paycheck. They're not necessarily very good at managing money on their own. So you can't count on them to manage money like they do their own, because it's not very good. And so you can do some training on. I even recommend companies do personal training to financial, because once that starts to click for an employee, once they start thinking about how they are spending money, it's contagious.
Yeah.
Just as waste is contagious. So both sides of that. So there's a lot of, what you've talked about is a lot of the science of the process, and I think that's very important, and that's where you start. But then you expand on to, is just, what is the culture and structure that needs to be changed to make sure that these cost savings can be maximized and last.
So I'm curious, as you consider the various clients you've worked with and
Mhm.
the book that you've written, I'm wondering, are there changes that most companies could or should be making as you consider ways to operate more efficiently?
Oh, most definitely. And each one of them has their strengths and weaknesses in this way, where I think the process that you talked about is a standard approach and a standard process, and I have the same same approach in that that's where I start. But then once you get on to a little bit of the structural issues and the culture issues, that varies significantly by company. You have some leadership that manages by a crisis, where they're in this constant crisis mode, which is expensive. If you have to have the employees, the resources, and then the distractions that come with constant crisis to crisis, then you're not really progressing your business. But the other one I mentioned already about essentially hiring people that are all like-minded and visionaries that aren't any doers. Those are all things that are going to matter quite a bit, that if you don't help them fix, that are going to haunt the company.
Okay, that's good. So, and I don't know what you're going to say to this, but does controlling costs, working with a client to actually help them manage their costs, does it hinder the client's growth potential? How do you see those being correlated as you work with a client and you start cutting costs and start limiting their spend? How does that then trickle into their growth opportunities?
Yeah, and I think this is one of the biggest myths or perceptions that perpetuate is that somehow cutting costs means you're cutting growth.
Yeah.
And it's, in my mind, I wouldn't be in business if that's really what I did, right? No one wants to call me up and say, okay, come help me and we'll lower revenue, or lower performance. Of course they would not want to do that unless they were, teetering on bankruptcy or something they had to. No, I think really what they do, it's a catalyst to growth and to performance. And I'll give you an example of a startup company that is innovative, and they're just known to be able to produce great results with very little resources. That's why they just really disrupt some of these big behemoth companies. And if you take that same team that is in innovation and you put them from that small startup into a big behemoth company, their productivity, their success will plummet because it's that big behemoth environment with all the red tape. Despite being money thrown at that, they can't produce the same results. A leaner company, a more efficient company produces better results. So you can't, like an athlete, if you're bloated and overweight and heavy, you can't perform as well as when you're lean and efficient.
Yeah. So here's what I'm going to say. And by the way, I loved how you described that, because I agree with you. Cutting costs does not mean we're not going to be growing the company anymore. The way I would refer to it is, in my example earlier, I spoke of starting first by understanding how the business makes money. And once you identify when they spend money through marketing, how they grow the business, how they make sales, how there's a return on that investment. Once you get into the cost saving strategies and you find places to actually save money, it's not to put it into the bank. It's now you freed up more funds to actually put towards marketing that allow the company to now focus on growth. So in the cost cutting measures, what we're doing is we're trying to identify places that will enable us to spend more in the growth strategies. And all of a sudden the business is realizing, okay, so in order to save my business, it's not a matter of cutting costs and then at the same time my business shrinks. No, it's cutting costs so that we can take those funds and put them better places in an ROI type position. So that's how I'd kind of look at it. So that brings me real quickly to a question of, what are some cost savings opportunities or strategies that you commonly find in a business?
So I would say probably the most common is utilization, and this is low hanging fruit as well, because utilization is usually not as controversial, right? You're not going to walk into a group and say, into a company and show them that they're only using 30% of their licenses on this software product, and that we need to cut that back, because who's going to argue that, right? And so there are easy wins, and they're usually all over the place. And utilization can go, oftentimes it's technology. There's this big technology smorgasbord where tech people have just bought and bought and bought. You couldn't get enough technology. And what you find is it's being very poorly utilized. And there's some opportunity there to streamline and become more efficient. And the problem with is when you have a bloated technology group, you have a lot more outages. You need a lot more resources to manage all these different applications. So like everything else, technology that is lean and focused is actually much, not only better from a cost perspective, but actually, again, from a performance perspective as well. So utilization, that goes beyond just technology. It can go into office space where you're not utilizing your office space very well. It can go into employees. You're not utilizing your employees very well, and they're not being productive because you're really not tracking that. And so utilization of all those various sorts is probably the number one that I find, and probably for the most part the least controversial. And usually clients are very interested in that conversation.
Yeah. Well, the thing that I'm finding here is obviously cost cutting is something that naturally can occur in a business when cash flow is a problem, but there's strategies, there's processes that we can utilize as accounting firms to actually help, if nothing else, assist the client in making well-informed decisions and practical decisions that they can use to turn the business around. And I think that's very important. So I want to bring into this a question simply because I know you're ready to answer it. But AI is such a common talking point today, and people are looking for ways to utilize AI in business in a variety of ways. And I'm wondering, how does AI play into this cost management strategy?
So AI is, screaming onto the stage here. So
Mhm.
it's a big deal. But I would argue, and I'm not alone in this. Many of my colleagues agree that much of the cost reductions, usually headcount related to AI, is more about extra bandwidth they had, and in the headcount utilization. So there was excess capacity they had, and that's why they're really doing those layoffs. It's less about that they picked up AI, and that's what's making the difference. Now, there's a few exceptions to that. There's call centers are leaning much more into AI. I'm not sure they're being all that much more successful from some. If you've listened to call centers lately, and I'm not sure they made a lot of progress there. But I would also say that programming is a big one where they've become AI has become much stronger, and so has legitimately reduced costs in that area. But
Well,
where it's going is immense, because I think what you're going to see is, there's some theories there that all the applications that companies use, the giant customer relationship management, the even the financial systems, all those type of things, those are all can be done by AI. And so you really, the question is going to be, it might change a lot of the tech stack that's out there within the next 3 to 5 years. Just thinking from a personal standpoint, right now I go on to TurboTax once a year to do my taxes. Well, if I just feed the information into AI that it knows how to handle that type of stuff properly, it doesn't need TurboTax anymore. Does TurboTax just go away from that aspect? Can they afford to keep it up if AI knows how to do that better? And that's true with all sorts of applications. So it has a potential to really change the very core cost structure of companies, and the companies that can adapt to that will do very well, and the companies that don't are going to have competition that are going to be more profitable and more efficient, that they have to watch out for.
yeah. Well, there's two things that I would add to this. One is lots of companies, accounting firms included, we have things that we're already utilizing, platforms that we're paying for right now that are incorporating within them AI interfaces. And so what's happening is those tools that we're already familiar with and paying to use are now starting to incorporate AI into the things that we're already using. So there's, I think, an AI application. But the second thing I want to bring up is we're going to see, as you were alluding to, companies actually finding places to replace either how an employee does their work with an AI element, or getting to the point where an individual could actually be not necessarily replaced, but the next time growth happens in the company, it's not going to be hire another employee. The AI is going to be leveraged by the existing employee to increase their workload or workflow. And so all of a sudden you're looking at businesses questioning whether or not cost control could actually take place through AI integration within the business. This is for accounting firms, this is for our clients. And so I think it's a question we need to be prepared to be asking, and at the same time evaluating with our clients, because I can't imagine that in the next 12 months, you're not going to have conversations where somebody is going to propose to you the use of AI, and you're going to need to look at it from an investment point of view. When's the ROI going to take place for that investment? How much time it's going to take to integrate it into the business model? These are questions that I think accounting professionals are going to be involved in very quickly. And I think we need to be prepared for that conversation. Would you add anything more to that?
No, I absolutely. I think there's this instinct of the more AI, the better, and eventually we will incorporate a lot of AI. But I think you have to be a little bit careful that anything that claims to be AI is not necessarily going to be progress. Motion is not necessarily progress.
Yeah.
And I think that's particularly true with a lot of companies. What they were calling was their normal software applications, and now they're just calling it artificial intelligence. They just changed the name, and it really doesn't do much different than it was doing before. So you have to be very cautious to make sure that you do not only are careful about what you put in, do pilots, do tests on it. You don't have to. There's no reason you have to dive face first into the river and hope there's no rocks that you're going to hit. Be contemplative, be careful, make progress on it. And if it's something that you can see substantial results for, that is clearly making the company more productive, more profitable, accelerating growth, then fully embrace it.
Yeah, very well said. So for the accounting firm, as they're listening to this, they're probably in one of two scenarios. They're either offering bookkeeping and accounting services and not really doing any of the advisory work that would involve cost control management, cash flow management, or they're already now offering advisory services and may have not really, let's say, enhance that offering to include this specialized service. What I'd like to do is ask you, what advice would you have for the accounting firm as to why this is a great service to offer clients, and how is it that they would charge? How would they actually deliver this type of an experience with their clients? What would you say to that?
Well, they are in a great position. Most accounting firms, because they understand the financials already, are in a great position to be able to do some of the analysis. So when they can have that first meeting, they're educated. If I go to a company I've never met before and I say, I can help you, I know I can, but I have no basis to be able to, the company has no basis to be able to believe that. Why would management hire me? Accounting firms with clients are much better positioned to be able to pitch that. And what I've pitched to my fees two ways. One, I pitched it that I will take a percentage of savings. And I love that model because I've made more money that way than I've made hourly any day. Because I only take 25% of the first year's savings, and they get to have that perpetually in most cases.
Yeah.
So it's a great deal for them, and I found it is a great win. Only problem is a lot of companies don't exactly. It's almost confusing because they're so not used to that model. And so the other way is a hourly model, just not too much different than most accounting firms charge. And of course you could do fixed fee, but fixed fees, I'd be more careful on that in this structure because it's not such a set amount of work. You can find it. You don't just work up to a certain fixed fee amount and then you kind of walk out the door. Then you're gonna leave a lot of potential savings on the table. You don't know what's under that rug until you've lifted that rug up. So I recommend either a percentage of savings if you're and maybe you can offer it both ways, or an hourly rate to your clients. But you measure the return. You can measure the return on investment that way to your client. You can show them how much you've helped save, and show them how much they've compared to your fees, how much they've had that return. And generally that, it's, I would say 10x more, if not more, and that's year one. So you can really add a lot of value to your client.
I loved how you gave some examples of what you could actually charge or how to charge for this, because I think it's very important for them to consider. But the next question I have is, do you see these engagements more as projects in the sense that they have a period of time that typically it takes for us to turn things around and put into place various procedures or processes? Or do you see this as a long-term engagement where there's always something to be working on with the client and they're always willing to pay for that monthly engagement, quarterly experience? Do you see it more as a project or more as an engagement?
It's a great question. So I tend to, clients that start me off, they call me in, they say they have a problem, and I go in there and I help them with that problem, quickly look and see how much successful that's been, and turn me on to a lot of different efforts. And so it kind of balloons and grows. So, I think the client will lead you to a lot more opportunity if you do early projects and do early show some early wins. So I think I would. I have found them to be more longer term than you would normally think. You would think you'd go in there two months and you're out. I found that there might be an intensity of 2 months, and that might be the majority of the project. But I usually find that there's trailing work that needs to be done, and the client is very interested in having you complete that work. So I think it could be a long-term revenue stream as well.
I love it. So you're more inclined that this is an engagement, something that could take place for 12 months, 18 months, 24 months,
Yeah.
versus it's a 3-month flash in the pan, get in, do something.
Yeah, most of my clients, I've been on projects that took me 2 years,
Yeah.
but by the time I was really done on that, and they still didn't want to let me go, and so I went into kind of a monitoring type of function after that. Some of them can be absolutely long term because, and then an acquisition comes along, and they say, well, can you help make that more efficient because
Yeah.
you know their cost structure perhaps better than anyone, and so they're very appreciative on those type of things.
Yeah.
There's a lot, and there's a lot of different phases to everything from the initial push to the ongoing efforts to a monitoring type of phase afterwards.
That's exactly what I was going to reference is there's phases to this because
Mm.
clearly there are things that are decided and implemented, but even though it's implemented doesn't mean it's going to work. And so you have to analyze, and that takes a period of time, perhaps as many as 1 or 2 months, to notice whether or not that change that was implemented has the effect we hoped. But
Yeah.
now you're tweaking it. But the important part isn't the change, it's now the documentation of this new policy to ensure that it's going to continue. So there's, I think, a number of processes here that lend themselves to being not just a project for a few months, but literally the engagement as you described.
Yeah.
So that brings me to this next question, which I think is very important. So I'm hoping the distinction I'm going to make is clear. But is it a consultative relationship that you're generally taking with the client where you're coming in and you're the one instituting these changes within the business? Or is it more of an advisory coach type relationship where you're interacting with the owner, they're deciding what needs to happen and they're implementing it? You were just involved in the clarifications and the brainstorming of how to do this, but they in the end were the business owner taking it to the management and the employees. Which is it? More consultative, they're hiring you to go in and do these things in the business, or more advisory and coaching that they're going to actually take and implement?
So I wish it was the latter, but it's really, and even though I make more money, arguably on the being the consulting aspect of it, but the problem is I find that usually companies don't have the resources that they're willing to dedicate to this, and that goes back to the problem I have where in 2 or 3 years, the progress we made starts to deteriorate because they don't have anyone else that I've left or my work has been I've curtailed it a little bit there, and sure enough, that it starts to unwind because they never assigned someone that could actually do the work and can figure that out. I much more prefer a model that at least you start on the initial wave and then you start transitioning it to employees that will maintain that work and that you train and that will be effectively able to continue that effort and not let the deteriorate after a year or two.
Yeah, I don't think we have enough time at all to dive into this, but I think for the listener, we need to really think through, are we doing this from a consultative point of view where they're hiring us to come in the company and be the ones implementing these things, identifying these things, working with the employees to try and get things to change? Or are we more in that advisory coach role where we're, yes, identifying and yes, we're working with the business owner, but at the end of the day, it's their business. And so they're the ones taking and implementing within the organization. Therefore, we're hands off. We're definitely involved, but we're not now running the business. We're not the ones implementing these things. They are. And it's a distinction that really impacts the engagement, how we're being paid, the duration of the engagement. There's a lot of things that get impacted based on the role we're going to take in the organization as these things are addressed. So great thing to consider and think through. But obviously, in a conversation like this, it's going to be difficult to go into the details of that. But the last thing I wanted to ask you is, what advice would you have to the accounting firm owner as they're considering working with clients in this capacity?
Well, I think what I said, give it a try on a client that you have one, you know your client's financial statements, you know those that could probably potentially use your help. Offer just to do if you need to do a discounted approach to your first couple of clients to show them that you can add some value there and train your own people so that they can get up to speed on that type of thing and build yourself out a new revenue stream and aspect of your practice. And I think you'll be surprised on how appreciative clients are of this type of work. They look at financial statement support and audits and those type of things as not value added necessarily business. We might, but they don't. And so it's much more effective when you show them that you can impact their business and improve their business. You much more likely create a long-term client that way.
One of the things that I can add to this is there's a great deal of satisfaction that can come when working with a client when you are able to help draw attention to the cost of goods sold and what it is that it is costing them to be in the service of offering that product or service. And all of a sudden they are able to implement things that cause more of that total income to go to the gross profit. They feel like, wow, I'm actually making more money from what I'm doing. And then when you're able to work with the expenses and cause more of that gross profit to fall to the bottom line, and they look at the margins and they start to see that they're improving. And honestly, they work as hard as they do to sell that product or service. And with your help, they're able to keep more of what they're making and have more at that net income level. That is so valuable. And there's an emotional thing to it. I think it's from a procedural point of view, a strategy point of view, it's fun for us as accounting professionals to be involved in that process. But from an emotional point of view, it can be life-changing as to the salvation of that business. They're now more profitable. They're now able to actually grow like they were wanting to because they have the funds and, more importantly, the cash flow to do so. So I love this conversation. I think this is a phenomenal service that as accounting professionals, we should be offering more so than just providing the financial reports and so forth. So Duane, this has been a wonderful conversation. Here's what I'm going to do. I'm going to come back to this and have you give a final thought. But to wrap this up, there are a few things that I'd like to do. First of all, I want to point out that Duane's been so kind to offer his book where you can actually go now and get a copy of the Operational Svelte. It actually is a great book for you to learn more about cost flow management and what it is you can do to manage costs and increase profit and enhance performance. So I encourage you to get a copy of his book and find out more how you can take these concepts and principles and apply them with your clients. In addition to that, I want to invite you to get a copy of the book in the Red to Black in 30 Days. Red to Black in 30 Days is a book that was written as a how-to guide for accounting professionals to do exactly this. Take and address the cash flow struggles that exist with business. You can get a free copy of Red to Black by going to universalaccounting.com and in the free resource section, get the Red to Black ebook. Now, as it relates to today's conversation, I also want to invite you to GrowCon. GrowCon is an annual conference for owners of bookkeeping, accounting, and tax businesses. It is a conference where we actually focus on things related to not only growing the business and getting the clients you deserve, but offering these types of quality services like we're discussing today to further enhance the value you bring to the client relationship so you can get paid more. Also at the conference, we're focusing on things related to efficiency, production, what it is you can do to work more profitably in your firm to, in fact, have the premier accounting firm in your business. So if you haven't already, go to universalaccounting.com and in the navigation, find out more about GrowCon. It is a conference you do not want to miss. It is something that you should attend, and I look forward to meeting you there. Lastly, I want to invite you to take part in the Accountrepreneurs Challenge. The Accountrepreneurs Challenge is a 90-day challenge for owners of firms to actually work on both your personal and professional roles. It's helping you actually become the leader you need to become, helping you identify things that you can do to improve how you're leading the organization, but also professionally, how you can build the turnkey business, really offering quality services, training your staff, dealing with things as it relates to tech stack and so forth. But at the end of the day, retaining the clients that you have. So go and sign up for the Accountrepreneurs Challenge. It's a 90-day challenge with weekly activities, some of which are on a weekly basis, a 5, 10, 15-minute activity, where other weeks it might be an hour or more that you're working both on personal and professional things to help you have the premier accounting firm in your area. Now, as a recap of the conversation today, there are a few highlights that I'd like to point out. One, I thought it was humorous how actually Duane got involved in the accounting profession, standing there with the frat boy, obviously deciding what career to actually pursue. And obviously he chose accounting, and it's paid off very well. As a CPA, he's done phenomenally well with businesses, helping that first business deal with the cost management issues they were dealing with, so much so that rather than going bankrupt, they were involved in an acquisition. But then to focus on this to the point of now writing a book to help us as accounting professionals understand what strategies we can implement, such as those that we discussed today. I think it's important to understand, like he pointed out at the beginning, the first and perhaps knee-jerk reaction of letting employees go is not the thing that we ought to be doing as it relates to cost flow management. We need to first of all look look at the operational side of things, how the company is organized, and also the processes, the systems that exist in the organization. And from that, it might involve letting individuals go, but it's then with purpose or intent rather than we just need to save money. The other thing I thought was helpful is with regards to cost-cutting measures, there was this process of assessing where can we actually do this so that we don't inhibit the growth of the company. Cutting costs should not mean the death spiral of the business, as he mentioned. Rather, cutting costs should free up the funds needed to actually put towards what are those revenue producing activities. And all of a sudden, what we're doing is we're taking away things that have held the company down and back and put them into things that will enable the company to grow. So that I thought was a real helpful part of the conversation. And then I also enjoyed where we were talking about AI, both for accounting firms and also for our clients, how that's now becoming a natural part of the conversation, as well as the part where we were considering what the engagement would look like. And I loved his suggestions as to how to be paid. I think it's important that we consider what does that look like. His pointing out that perhaps 25% of the difference that he's able to actually implement within the organization is a great way of being paid for what actually happens. I thought that was wonderful. But also understanding that the relationship is either going to be consultative or more of an advisory coach type relationship, and distinguishing that hopefully at the point of the engagement. All of these things were, I think, very important parts of our conversation today. So Duane, what more would you like to leave as a closing thought?
Well, thank you again, Roger. This is a great opportunity. And when you talk about building a premier accounting firm, I struggle to think how you could really do that without some services like this, because your clients need them. And I think what you'll find is if you can help a client improve their financial position, you have made a client for life. So I think it's a great opportunity. Yes, additional revenue stream, but it's a win-win for both the client and the firm. So I encourage firms to do more of it.
Duane, that was wonderful. Well, thank you for that. And everyone listening, if you haven't already, subscribe to the podcast. We would love to have you as a regular listener, hearing these various things that we need to be doing as we speak to the experts and learn what it is we can be doing to work on our business, whether it's marketing, selling, offering quality services, working more efficiently. Each week, you're going to hear from the experts what it is you ought to consider doing to build the premier accounting firm in your area. So subscribe now if you haven't already, and set those notifications for each week when we release a new episode. Also, regarding today's episode, if you'd like more information on these principles and the things that we've discussed, by all means, feel free to reach out to us. You can go to universalaccountingschool.com and find there more information and resources, as well as give us a phone call at 801-265-3777. Now, you can go to Universal Accounting School and find various programs, but I want to also invite you to hear the highlights or podcast playlists that we've compiled from past episodes. You can actually go to universalaccounting.com and in the navigation find the podcast section where we've actually put together things related to marketing, selling, tech stacks, mental health, just a variety of playlists that we've compiled from episodes over the years that actually have the experts addressing those things that are perhaps timely to you today, those specific things that you're addressing and dealing with now. So go to universalaccounting.com and in the podcast section, find those playlists that specifically address your current situation and dive in and go deep and figure out what it is that you can be doing to take your business to that next level. And with all that said, I invite you to join me next week. And always remember this: accounting success is universal. Take care. Have a great day and be safe out there. Duane, that was fun.
Yeah, thank you. I tell you, you've got a gift for this. So I'm glad to see people like you in the field. You're smooth.
Well, thank you.
Well
I have fun. Well, here's what I'm having you do. Go to the play or the chat, and in the chat, you're going to see that text that I offered.
Yep.
And I'm going to have you record that promo piece.
Okay. I'm ready.
Uh-huh.
Okay. My name is Duane Deason. I was just on the Universal. I'm sorry. Can I start over?
Yeah, you can start all over.
All right. Sorry, but I just wanted to make sure I read this. Okay. All right. I'm ready to go again here. This is Duane Deason, and I have just recorded a great podcast with Roger and trying to build a premier accounting firm. It was a great experience. We talked a lot about how cost management can make a real difference, not only for you and your firm, but for your clients. They need this service. It can be a great benefit, a win-win situation. So please listen, and I think you'll enjoy it.
Perfect. That's awesome. Okay.